Ladies and gentlemen, dear alumni, thanks for joining our webinar today. Well, what does the rise of the new protectionism, also due to the US-China trade war, mean for our economies and also your businesses? What are the associated risks and also opportunities? Can we expect any changes from the upcoming G20 talks in Osaka this week in this regard? My name is Friederike Rieder. I'm very happy to have a sought-after trade expert with me today. Simon Evenett is Professor of International Trade and Economic Development at our university. Among other things, he's also Director of our MBA. I would like to welcome Simon. Simon, you just got back from your stay in the US, from an extended research stay. We're very lucky to have you here today. I hand over to you, and I wish you an insightful lunch break.
Thank you, Friederike, for this invitation, and it's great to engage with our alumni yet again through this seminar. The purpose of this particular seminar is for me to be able to describe 4 implications for business of the US-China trade war. To do that, I'm going to build the argument in the following way. First, I'm going to briefly describe how China's clout in the world economy has been transformed over the last 20 years. Second, that transformation has caused alarm in some trading partners, especially in the United States, and I'm going to describe the accusations the United States has made about China's rise and who's behind those accusations. Third, those accusations have resulted in a trade war whose scale and form I will then discuss, and this will give us a sense of perspective about the importance of this particular piece of trade tension. And then fourth, I'm going to talk about whether the trade war will intensify between China and the United States and possibly spread to Europe. Having done all that, I'll then be able to draw out the implications for business. And as I said, there'll be 4 of them, which I hope to share with you. So I'll just get the presentation going now. Very good. We have the slides now, and I'll proceed through it. For those of you who are listening in on the phone, I'll try and explain the material on the slides as we go through so you don't miss anything. All right. Let's start then with the Chinese juggernaut, which has hit the world economy in the last 20 years. The first slide I have here is one which shows the share of Chinese exports in world exports. And you can see from the year 2000 on, with the brown line here, that that share has risen very, very fast, often at the expense of Europe and North America. So this increase in Chinese exports has also resulted in China becoming the #1 trading partner for over 40 nations. So back in the early part of the century, China was rarely any country's top trading partner. Now over 40 countries have their largest trading relationship with the Chinese. And as you can see from this particular slide, that's often come at the expense of the United States and the European Union. If you turn from trade to foreign direct investment, you can see in this particular chart in blue, that in the bottom 2 bars, the falling share of American and European Union foreign direct investment, in global foreign direct investment, and the growth in brown, especially in the last 5 to 10 years, of Chinese foreign direct investment. A lot of that Chinese foreign direct investment are acquisitions, and of course you may remember from last year the very controversial Chinese acquisition of the German robotic company KUKA, which amongst others has really triggered a rethink in Germany of its approach towards China. So China is not just a big trader now, it's becoming a big foreign direct investor as well. Now, the business side of this, which I've just talked about, the trade and the investment side, is also matched by the rise of China as a military power. I'm not going to say too much about the geopolitical side of this, but it would be wrong to forget this and to overlook this. And so on this slide here, I show you since the year 2000, the phenomenal increase in Chinese spending on its military. And on the right-hand side, you can see a map which shows with dotted red lines just how much of the South China Sea the Chinese thinks belong to them. And this, of course, is something which puts them at odds with a lot of their trading partners and neighbors. Now, for the rest of us, why this matters is because so much of world trade passes through this particular region, and as a result, any conflict there would be extremely disruptive. So China has become not just a big economic power, but also a growing geopolitical power, and some say is testing the United States' primacy in the world economy. So having laid out the Chinese juggernaut, let's now turn to the US accusations against China. Now, of course, China, the United States is the number one foremost economic and military power, and it sees a rising competitor in China, and it over time has made a number of accusations about Chinese economic practices or business practices which it thinks are unfair. And I'm just going to take you through them. The first argument, and one which is made by President Trump all the time, is that the large bilateral trade deficit between the United States and China reflects Chinese unfair trade practices. Now, what are those unfair trade practices? Typically, the Americans focus on subsidies to begin with, arguing that there's a mass subsidization of Chinese industry, mainly through development banks. China has also announced this 2025 industrial strategy of theirs, which has caused a lot of concern, not just in the United States, but also in Europe, because China has ambitions to take over and be at the top player in many of the leading industries of the world. And this has caused some nervousness in more innovative high-tech sectors as well. So we start off with subsidization as industrial policy, as American accusations of unfair trade practices. Coupled with that is the belief that all of this subsidized Chinese industry is flooding world markets with products, and these world markets are being saturated with excess capacity, and this is hurting competitors in other countries. And this accusation has been made particularly with reference to the steel industry. Now, another accusation against the Chinese is that they have forced the transfer of technology by Western firms who are investing in China. And these forced technology transfers are thought to be as either illegal or unacceptable or inappropriate. Of course, it should be said, Western firms voluntarily invest in China. No one makes them do this. But the American concern is that the terms of this are not right. The last concern the Americans have is that there is a lot of cyber theft and other breaches of data security which are arising either from Chinese business or from Chinese government sources, and that this represents not just a competitive threat to the United States, but also a security threat as well. So this is quite a long list of accusations which the Americans have mounted against the Chinese. And this really accounts for, I think, the widespread support for President Trump's actions against China in Washington, D.C. In fact, if you break down the different supporters of the current U.S. hardline on China, you come up with four groups. The first group, and this may seem a bit surprising, these are people who traditionally support free trade and global engagement with China and with the rest of the world, but they're afraid that Chinese unfair practices end up distorting foreign markets. So they want to see China reform. So the Chinese reform of their economy is what this first group wants, and they're prepared to see a tough line by the United States to get that. The second group are long-standing skeptics about trade. Some are even protectionists, mainly in the Democratic Party, who have joined forces with President Trump on this initiative because they fear that Chinese imports will lead to more job losses. The third group of people who are supporting a hardline against China are techno-nationalists. These are people who believe that the United States should not give up its leading position in cutting-edge technology sectors and alike. And they do not want to see China take the lead in any of these sectors, such as 5G. And of course, remember, the dispute with Huawei is one feature of that. The fourth group are another group who are supporting President Trump on this, and these are what you might call the national security hawks. And these national security hawks see China as a threat to the United States' primacy in the world. And they want to decouple, that's the phrase they use, decouple the US and the Chinese economy. And they want to see the separation of these two economies as far as is possible. Now, it seems the underlying logic behind this national security view is that if these economies can decouple, it's easier to win what could become another Cold War between the United States and China. Maybe the thinking here is that the Americans knew how to win a Cold War against the Soviet Union, which it didn't trade much with, and once they get in that position with the Chinese, they can do the same. So we have four sets of groups then who are very much standing behind President Trump, but notice they want different things. And this will become important when we talk about the resolution of this particular trade war later. Now, you might be asking yourself, given the support we had for globalization just a few years ago, why isn't there serious business opposition to confronting China? Well, there is a business, US business has voiced some concerns, especially certain leading groups of US business firms, but they've been rebuked by the Trump administration, and there's two messages which the Trump administration gives them. And this cover from The Economist I have shown you here, which is Why Does Corporate America Love Donald Trump, gives you part of the answer. And part of the polite answer from the Trump administration is the business got huge tax cuts and deregulation, and that they've benefited from this, and that China, the bashing of China or the trade confrontation with China is the price that they should pay for these other goodies. In other words, you got what you wanted in tax cuts and deregulation. We want to fix China, get in line. That's the polite message. The impolite message, which was put by Vice President Pence in a speech to the Hudson Institute last year, was to basically accuse US multinationals who had invested in China of rebuilding China. And so the argument there is, you US multinationals have rebuilt China, you've built our biggest rival and threat, and the implication is that they should not be so unpatriotic in the future. So this is a much nastier line and a much tougher line. But essentially, both together help you, I think, understand why the criticism of the Trump administration for business has been quite muted. So the story so far then is we have a rising China, which has worried the United States. 4 big constituencies in Washington have come together to support a tough line against China. And the traditional business opposition, which you would hope to see stop any of this nonsense, hasn't been effective. And that's because they've either been bought off or they fear being accused of being unpatriotic. So the trade war then, which took place, essentially follows from the pressure from these 4 groups who want to see a confrontation with China. The trade war began technically in 2018 with the US raising tariffs on Chinese imports, but in fact started earlier in 2017 when the US launched a series of investigations into Chinese practices. They resulted in decisions in 2018, and the traditional trade war is framed in these terms, that it started in 2018 and was principally a tariff-related matter. On the slide I have here in front of us, we can see on the right-hand column the total size of bilateral trade in 2017 between China and the United States. It's roughly $670 billion. And we can see in the 4 cells, which I'll describe to the left, essentially how more and more of that trade has been covered by different types of tariffs. Now, the framing of the trade war is very important because it overlooks certain key things which are very relevant for business. Remember, I told you the framing is everything starts in 2018, and it's all in terms of tariffs. Tariffs are the big story. So let's focus then on each of those pieces, because it is true that in 2018, the US put in place tariffs on almost $280 billion of Chinese goods, and the Chinese retaliated to a far less degree, mainly because the Americans export far less to China. And it's true that President Trump threatened to put even more tariffs on Chinese imports in May of this year. And this is what gets the headlines. And that is a big part of the story. And if you add up the first, the second, and the fourth column in this particular PowerPoint slide, you can see it covers almost all of Chinese trade, or Chinese-US trade, which suggests a substantial amount of business is being affected. What is missing is the middle column, the third column, which involves all of the other different interventions that the Chinese and the Americans have undertaken in 2018, which mainly have nothing to do with tariffs and are much more what we call traditionally non-tariff barriers. These are different impediments the governments put in the way of foreign businesses to try and slow down their acquisition of market share and the like. And so if you add in these additional non-tariff barriers, there's actually been 100 billion more of trade affected in 2018. So in that sense, the trade war was actually bigger last year than many of the newspapers reported. The second feature, of course, is that the traditional framing of the trade war begins or implies that it began in 2018. And so you have this sense that it's before or after 2018. This is quite misleading because trade barriers by the Americans on Chinese exports and Chinese exports on American goods have been building up for quite some time. And to show you that, let's turn to this slide here. In this slide here, what I've reported is the total amount of Chinese trade to the United States, which has faced some type of American trade restriction. Now, this could be a tariff, it could be competing against a subsidized American firm, it could be a Chinese firm running into import restrictions of some other type, paperwork requirements. And what we've done here is to add up all of those different requirements and to calculate how much Chinese exports to the United States were affected by protectionism before the trade war began in 2018. And there's a very surprising finding. That is, before the trade war started in 2017, already 69% of Chinese exports to the United States traded freely. Did not trade freely. They were affected by protectionism. Turn that around, only 30% of Chinese exports to the United States before the trade war traded freely. And after the trade war begins, that percentage falls from 30 to 13%. So there's a very big implication here, and that is that Chinese firms who have been exporting to the United States have been exporting and facing American trade distortions for a long time. Now, it's true that Donald Trump's tariffs of 10 or 25% are a big tax on their exports, but this is not the first time that many Chinese firms have faced protectionism in the US market, which I think has one very big implication, which is their capacity to absorb protectionism should not be underestimated. It's true that Chinese exports to America have gone down this year as a result of these tariffs, but maybe it hasn't fallen quite as much as many people thought. And that is probably because the remaining exporters from China to the United States are very efficient exporters and they're able to adjust to protectionism when it gets imposed. In fact, if you break down the amount of protectionism faced by Chinese firms into the United States, you can see that in 2017, and I've identified this here in red on the second bar, over $150 billion of Chinese exports to the United States was already dealing with 2 or more American trade distortions or trade restrictions. So this gives you a sense of just how robust a lot of the Chinese exports has been. By the way, notice that the Chinese trade facing American protectionism was quite high under the Obama administration. President Trump often says the Obama administration was soft on China. In fact, actually, at the end of the Obama administration, nearly 2/3 of Chinese exports faced protectionism in the US market. So in that sense, President Obama and his team were not soft on China at all. Okay. Of course, President Trump has taken it to the next degree, raising the share of Chinese exports to the United States facing protectionism up to 0.87 or 87%. So these charts here give you a sense of the scale of the trade war. The trade war did add to the amount of protectionism faced by the Chinese, but there was quite a lot of protectionism in place in the first place. So in that sense, there must be a lot of Chinese exporters out there or foreign firms with multinationals in China who have become very good at coping with and dealing with American trade protectionism. And of course, this additional dollop of protectionism from President Trump isn't welcome, but it does suggest that exporters from China are a lot more robust than many people might realize. So that gives you a sense then of the scale of the trade war and helps you put it in perspective compared to the buildup of protectionism that had occurred in the years beforehand. What I'd like to turn now is the question looking forward, will this trade war intensify? And here I think I'm going to take you through step by step what has happened since the last big G20 leaders meeting in Argentina, where President Xi and President Trump had a dinner and decided to have a truce. At that time, the Americans set an end of March deadline for coming up with a deal with the Chinese. That deadline was passed. And once that deadline went past, perhaps the Chinese didn't think the Americans were quite so serious or going to be quite so tough. And so the talk slowed down. And when we got into April and early May of this year, American patience finally broke. And the Americans started accusing the Chinese of walking away from the promises that they had made earlier. The Chinese say the same about the Americans. And of course, since I wasn't in the room, I don't know which who is telling the truth there. But what certainly the case is that the fallout from this disagreement in early May, which resulted in President Trump raising tariffs even further on Chinese imports, has made it much harder for the Chinese to agree to anything in the future, because the Chinese have lost yet further face. And of course, President Xi, who is indeed himself, I think, a fairly robust nationalist figure, doesn't want to seem to be backing down to President Trump. So this was the bad blood we had at the in April. Then this was followed by another incident which had nothing to do with China, but actually had to do with the Americans threatening to raise tariffs on Mexico by 5% a month unless Mexico fixed their migrant problem, as the Americans saw it. Now, why is this relevant? Well, let's not forget the Americans had renegotiated a trade deal with Mexico and were trying to, or had agreed that trade deal. And now, a few months later, they decided to go back on that trade deal and actually raise tariffs even further. So if you're sitting in Beijing, you look at this particular episode and think, even if I do a deal with Donald Trump, then that doesn't mean in a couple of months he won't come back and raise tariffs even more. So this undermined American credibility quite substantially in the negotiations and made the Chinese even more reluctant to deal. The conclusion then is that the result actually has been a lot of tension building up between Beijing and Washington, as neither side has been willing to move. And the consequences, in my view, that there's at most a 10% chance that we'll have a substantive breakthrough at the G20 summit when President Trump and President Xi meet. At most, I think what you'll get is a lot of nice choreography and fine words and very, very little substance. The problem going forward is that as the US presidential election beckons, then President Trump will be even more reluctant to sign a deal with the Chinese, because if he signs a deal with the Chinese, he'll have to own that deal, and the Democrats will attack him for being weak on China. And the Chinese may fear that then the President Trump would renege on the deal sometime next year, which is yet another reason why not to sign it. So sign a deal with him now. The consequence, and this is my last bullet point on this slide, here is that I think, as far as business planning is concerned, we should plan on the current tariffs remaining in place until 2021 at least. And so this, I think, should be factored into planning horizons. What does this mean for Europe? Well, I think the trade war could spread to Europe in three possible ways. I'm not sure that any one of these three things will happen, but I think they should be on your radar screen. First, the Americans are investigating whether car and car parts imports into the US constitute a threat to its national security. Now, whilst that claim may seem ludicrous, and it probably is, it does, of course, implicate the big car exporting nations of Europe, of which Germany is a key one. The Trump administration has postponed their decision on this until October because they don't want to be fighting the Europeans when they're fighting the Chinese. But there is a scenario going forward where the Americans get tough on the Chinese and then get tough on Europe afterwards. And that, of course, would then bring pressure on Europe to retaliate against American products, and we could end up with a transatlantic trade war. The second reason is that as American tariffs rise on Chinese exports, products from China get diverted into European markets, and European nations start raising tariffs against Chinese goods. There's little evidence that this has happened to date, but we must just still keep it in mind. The third reason, which we're seeing increasingly, is the Chinese policy towards, EU policy towards China is becoming more and more defensive and restrictive. And we have French-German proposals for a new industrial policy which would put in place restrictions on mergers and acquisitions by Chinese firms of European firms, and which will also call for much greater subsidization of European industry, which might actually be an opportunity for some European firms to get their hands on cash from Brussels and from national governments. So there is three different ways in which I think the trade war can spread. Having laid that out, let me quickly draw out four implications for business. And here, a little bit of history helps because we've had trade tensions before. And when the Americans got very worried about Japanese growth in the 1980s, they put in place some restrictions on Japanese exports, which provided interesting case studies. So the first thing the Americans did was to ask the Japanese to limit the number of cars, for example, that they would export to the United States. Now, strangely enough, the Japanese accepted these limits in return for not having to pay tariffs. And of course, they raised their prices because output was restricted. But most importantly of all, the corporate strategy response was for the Japanese car firms to upgrade their cars and move into the highest margin segments in the US market, taking on the big three car companies, as they were then known in the United States, and making substantial profits. So these quantitative limits are known as voluntary export restraints, and they're being used today by the Trump administration. So that playbook can be used again. The second response of the Japanese firms to US tariffs and trade protectionism in the 1980s was to set up production in the United States, not R&D facilities. They kept all their expertise and knowledge at home, but they set up production facilities in the US, got their hands on lots of tax breaks from local states who are willing to see their production there. And then, of course, because they were producing inside the United States, they couldn't be hit by US tariffs. Now, this sort of tariff jumping foreign direct investment, as it's technically called, has a 21st century form. People call these now localization strategies, which is moving a production closer or more local to your customer. So these two strategies were available to Japanese firms and are available now. Of course, if you are going to relocate production, this does beg the question, should you relocate from China? Well, here I have three things to say. There are three very short messages. First, you should avoid what we call the sunk cost fallacy. Just because you've spent a lot of money setting up a facility in China isn't a reason to keep producing there if there's a better alternative where you can make money elsewhere. So you don't use the fact that you've spent a lot of money in the past to keep you in China. Instead, ask a second question: is there any way you can make up the 25% tariff payments that you are going to have to pay through higher levels of productivity or upgrading your products and higher profit margins? I call that the 25% test. If Donald Trump is going to tax you 25%, can you make your facilities in China 25% or more profitable? In which case, you may find that staying in China and upgrading is much better than moving to another location. The downside with this strategy, of course, is that the tariffs may rise above 25% at some point in the future. The third option, of course, is to consider relocation. And here, Vietnam gets a lot of attention as being a potential location, having cheap labor, but it doesn't have the same base of suppliers and infrastructure that China has. And Vietnam also has a large trade surplus, which may well make it a target of President Trump's protectionism in the future. The second from last of my business implications is really to do with industries which are technology related. So much of technology today can be seen as having a civilian use and a military use. We call these dual use sectors. And what we're seeing is that the Americans are equating business security, economic security, and national security, and they're taking a very hard line in the IT sectors against Chinese firms like Huawei. What this is probably doing is going to create, this will result in an Anglo-Western bloc, Western European bloc developing of countries which will use each other's IT equipment, but will not use equipment from China, and probably an East Asian bloc which will be based centered on China. The interesting question is, which bloc will Switzerland join? I suspect it will probably join the Anglo-Western European bloc. But if you're an IT producer, which bloc do you want to supply to? You'll probably only be able to supply to one. So you're going to have to choose. So this world market will become fragmented into two blocks. And I think that's worth thinking about. There is an upside here, strangely, which is that if the US is determined to rebuild supply chains and develop 5G-related technologies at home, they realize this is going to cost a huge amount of money and require a lot of investment. And behind each of those investments must be some serious business opportunities. So thinking about how the Americans can get back on top and how a firm can contribute to that particular process might be a business opportunity too. The last observation I want to leave you with is much deeper and goes to the fundamental choices we make in international business strategy. And often we argue that business strategy is a choice between three options: adapting your products to local circumstances, aggregating production in one place and taking advantages of economies of scale, arbitrage and taking advantage of low costs. Each of these strategies gets undermined or affected if we have more nationalism and protectionism. Arbitrage strategies, taking advantage of low labor costs and the like, especially if it's in China, is clearly being hit by Donald Trump's tariffs. Aggregation strategies could be hit by tariffs as well, especially if the target or location is facing high tariffs. And adaptation strategies may be harder to pull off if customers become more nationalistic or want to buy local. So I think the deeper questions raised by a world which is becoming more nationalistic and protectionist is that the three sources of profits that we typically associated with globalization or with strategies going beyond your home market are each under attack. And the question is where to position a company given these changed circumstances. Now, the answer will clearly differ across firms, but I think the three-way trade-off, which is characterized by this particular chart here, is a good place to start. So let me conclude there, and I look forward to taking your questions about both the sort of causes, the symptoms, and the consequences of the US-China trade war, especially as to what it means for business.
Well, thank you so much, Simon. I'll just close this screen sharing. I've received already many questions. Please send us more and use the voting feature to upvote those questions you like. So I'll just start from the top, Simon. How can the EU benefit from the US-China trade war? And what would you advise the next European Commission, really?
I think EU firms will benefit from the US-China trade war in two ways. First, as Chinese products are being blocked out of the United States markets, or their imports or their share of US markets goes down, this creates options for European firms to fill those, fill that market share. Likewise in China, as China decides to put tariffs on American products, this will deflect spending from American products possibly to European products. So I think that's one simple way in which this could work out. And then I think another way in which this could work out is the relations between China and the European Union could get a lot stronger, but the messages we're getting from Brussels are one of increased skepticism about China and its role in the world. And so I suspect over time, actually, the EU will align much more with the United States in substance, if not in style.
We'll take a very short question. Will the slides become available? Yes, we will send them next week along with a link to the recording. What about American companies who produce goods in China, for example, Apple? How are they impacted? Is the Trump trade war hurting Americans at the end? Are iPhones getting expensive for Americans? Now, someone commented Foxconn, for example, is building a huge factory in India as a result. What are your views?
So there are clearly American firms who are being hurt by President Trump's tariffs, and some of them have tried to make public their opposition, but as I said, not quite as loudly as you might have imagined. Apple has been hurt. I mean, their supply chains are materially affected. Indeed, Foxconn is moving production to try and, I think, supply Apple's needs from an Indian base. And so you can imagine profits in those companies which are heavily dependent upon Chinese supply chains being affected. And it would not just be Apple in the IT sector, think also of Walmart, which sources a lot from China as well. So these companies are taking a hit. The reaction of the Trump administration to these companies is to say, tough luck. You've got great tax cuts. You're getting lots of benefits inside the US from deregulation. Stop complaining, stop whining. And so far, that strategy is actually fairly effective at neutralizing American corporate opposition.
Thank you. Who are really the biggest winners of this trade war? Vietnam, perhaps?
So the winners of this particular trade war are the countries which I suspect will acquire production because some American firms will source from places other than China. So Vietnam is a natural choice. Taiwan might be, actually. You might also think of Mexico once the relations between America and Mexico calm down. So I think these countries will benefit. You mentioned India earlier with Foxconn. I mean, this would be a real turnaround if India started developing a manufacturing industry of substantial size because of this trade war. But I'm not saying that will happen, but that would be a remarkable consequence if it did. So I think these are the countries which are probably the biggest beneficiaries.
Thank you. And what role or what potential do you see for the WTO in these matters? What are the roadblocks?
So the World Trade Organization finds itself in a very difficult position because these two big trading powers are technically breaking the rules by raising their tariffs on each other to the levels that we have seen. And so at most, the WTO can try and encourage these countries to step back from the brink. But how do you tell these two big elephants to behave? You can't. So there has to be a lot of sort of personal persuasion, moral suasion. And there you have, all you have is arguments, right? The WTO doesn't have a jail, it doesn't have an army, doesn't have a police force. And so we should not expect too much of that. I think instead we should expect the big countries who are other than the US and the EU, so countries like Japan and others, to start putting pressure on Washington and Beijing to settle their differences. And arguably that's already happening in the G20 process.
Mm-hmm. Thank you. And what price do you expect will the US pay for the current protectionism?
At the moment, the US will pay several prices, right? In terms of higher purchasing costs for buyers, I mean, that's to be expected, and that's already feeding through into the US economy. In terms of the overall net GDP losses, so far the estimates are really small. In fact, they're really, really tiny, which is a bit surprising. That probably suggests what's happening is that buyers are being hit quite hard, but import competing US firms are gaining a lot. So there's probably a redistribution within the US from buyers to local sellers. The US will be hurt a lot in another very important way, which is that this trade war has really undermined faith in US leadership in the trading system and in global governance in general. And it'll be much harder for future US administrations to say, trust us, why don't we try and fix these problems? And I think that will be a long-term price that the Americans will pay for this.
Thank you. Will Trump and Xi follow through with escalating the conflict if either or both economies suffer from the impact of protectionism? Put differently, how robust are the two economies to the trade war?
The economic impact on the US so far of the trade war, as I said earlier, has been quite small. The impact on the Chinese economy has been bigger, but the Chinese government has more tools for reflating the Chinese economy. Now, you can say that the use of those tools isn't very smart generally, but if they're desperate, this is what they will probably do. So I suspect the outcome will be that there will be harm done to both of these economies. It will be small. If it becomes big, mainly because firms postpone investment decisions because they're afraid of the future, then you'll see monetary policy and fiscal policy stimulus is being put in place. You're already seeing the Federal Reserve Board and the European Central Bank indicating that they're prepared to stimulate their economies if investments and business confidence remains low.
Thank you. And how do you suspect will the slowdown of the global economy affect the trade war between the US and China, if at all?
Global slowdown is important because, again, of course, it puts pressure on countries which are net exporters. And, of course, this would be China. Countries like Germany, also Switzerland, also face pressure when the global economy slows down. And so you would expect to see this shift the weight in the negotiations just a little bit in the Americans' direction, but I don't think enough to make a material difference.
Mm-hmm. Thank you. In case the US fails in the China trade war and shifts to the EU instead, it doesn't reduce the threat of China for the US. So what would be the motivation of the US to turn the tariffs on the EU?
So President Trump has taken the view that trade deficits from any country are bad. And it turns out that the Eurozone has a big trade surplus with the United States, or in particular Germany does, as well as China having a trade surplus with the US. So the American view on this is that once they fix China, they will try and fix the European Union. Now, they don't quite have the same long list of grievances that I showed you at the beginning of my presentation with the EU. So with the EU, they can't go around and say, forced technology transfer, things like this. They have a shorter list of grievances, but they still have a list of grievances. And if the Americans turn to protectionism, of course, this will disrupt the corporate plans of companies which ship from here to the United States.
Now, slightly different question. Does it make sense for technology startups to enter the Chinese market now?
I think you would want to think, I think that depends very much on which technologies we're talking about, but if they're ones which are increasingly national security sensitive, or ones where there's so-called dual use, that is, the technology could be used for military reasons or for national security reasons as well as business reasons, then there's got to be bigger doubts. And unfortunately, the tech sector is increasingly going to be presented with a choice. Which bloc are you going to join? Are you going to join the Anglo-Saxon Western European bloc? Are you going to join the East Asia bloc? And the world will divide between those two blocs.
Do you think that digitalization will impact the whole process in any way? And if so, how?
Digitalization comes in one way, because there's a dog that hasn't barked in my presentation, and that is that all of the tariffs are put on trading goods. Digitalization helps cross-border trade and services, and we don't have tariffs on cross-border trade and services. And so that side of global commerce, which is becoming really important and which is facilitated by digitalization, has not been harmed. Mm-hmm. And so digitalization in many ways is providing one way around the trade war, okay? And that might be good news. Unfortunately, it might also induce politicians to figure out ways to introduce protectionism in cross-border trade and services, but we haven't got there yet.
What role does the Belt and Road Initiative play in this trade war? And do you have a view on how Switzerland will position itself between the two economies, being sympathetic of Belt and Road as well as taking up exploratory talks of a bilateral trade agreement with the US?
Right. So the Belt and Road Initiative is becoming how China likes to do regional integration with its neighbors. It wants to build infrastructure, lower the cost of transporting goods through the Silk Road up to Europe, and in so doing, essentially integrating the economies along that way. And of course, those economies will buy a lot of steel, which is made in China. They'll use a lot of Chinese engineering firms and the like. So there's a clear commercial payoff for the Chinese. Doing that type of initiative is much more attractive for the Chinese than signing trade deals where you have to make legal promises. And I think the Chinese much prefer that form of integration than the formal Western type. Now, where does this leave Switzerland? Well, Switzerland has a trade deal already with China and is not walking away from that. Curiously or interestingly, the US and Switzerland are talking about doing a free trade deal too. It will be interesting to see whether the US is less keen on this trade deal with Switzerland because Switzerland has a trade deal with China. That hasn't really been discussed as far as I know just yet. So I think that's an interesting dynamic which we might see. Now, generally, where does Switzerland position itself in this trade war? The right thing to do is to stay neutral and stay out of it and let these two giants figure it out. And if you're necessary, Switzerland becomes a facilitator of a negotiated solution, but I think these two players want to sort this out themselves.
Well, excellent. I think we can take one, possibly two more questions. What does all this mean to the stability of financial instruments? Will we see another downturn in shares and interest rates?
I think that this is a very good question because the trade war has induced uncertainty. In fact, if you look at the simulations of the International Monetary Fund, the only way this trade war generates a global recession, and even a relatively short one, is if there is an adverse reaction in stock markets and financial markets, which lead to higher risk premia and reduced investments. And so anything which scares the stock market here is a worry. And I think the concern that this G20 meeting might not go well and that afterwards there will be additional tariff increases has led central banks to anticipate this very problem which is raised in the question. And that's why they're, I think, indicating that they want to stimulate the economies, or they're prepared to stimulate them again. So I think one of the big lessons from this particular trade war is that the biggest impact of tariffs can actually come through financial markets and its effect on business confidence, not through hitting consumers with higher prices.
Thank you, Simon. There are many more questions, but our time is really up. So thank you for sending all these questions. Thank you for your attention, for viewing this webinar. Do you have any final remarks?
I must say this was great fun. Thank you very much for the questions. It was great fun actually preparing this. This is a new format for us here at St. Gallen, and I hope you like it, and I hope we can engage with it again. Thank you and have a good day.
Well, thank you, Simon. We'll go into a bit of a summer break with our webinars, so stay tuned for our emails to receive further invitations. And of course, we'll send you, as I said, the link to the slides and the link to the recording. So I wish you a nice and sunny and not too warm afternoon.